Hey guys, welcome to another video. If you're new here, I do all kinds of in-depth stock market analysis videos on things like SPAC mergers, penny stocks to buy now, dividend stocks for passive income, all kinds of different things, but none of this is investment advice. It is just an opinion channel about money. Now, on this one, I want to talk about a company called Payoneer. They're a payment processor. They're a private company that's looking to merge with this shell company, a SPAC called FTOC, and they're looking to go public. I think this is a really interesting one. I've prepared both a bull case and a bear case. I want to show you some different points on each one of those, explain why I think it's a good thing and why I think it's a bad thing. And if you stick around to the end, I'll give you my final summary, my analysis, and which case that I think wins. So let's get into it. Okay, so first up, we'll take a quick look at the two companies. The SPAC itself is ticker symbol FTOC. It's a little confusing because the SPAC itself is called FTAC. There's actually several of these. It's one of these SPACs that has a family of investment companies, and they're going out and acquiring a number of different targets. So this FTOC SPAC is the one that's going after Payoneer. Now, this one is backed by Betsy Cohen, which is really significant. You know, Betsy Cohen has a super long career in finance. She's been doing this for 40 years. She was involved in what is kind of one of the original fintech companies, which is Bancorp. They're actually a technology provider behind a lot of banks and payment platforms today. So, you know, you couldn't really ask for a better, more experienced person to be heading up this one. And she's actually involved in this entire family of SPACs as they go after specifically fintech targets. So very, very strong leadership team in place in the SPAC, which is pretty awesome. In this case, though, I don't think they're actually injecting anybody into the management team of the new combined company, which is totally fine. In this case, I think Payoneer also has a strong management team. So, you know, I think it's a strong deal on both sides. And I think they stand a really good chance to get the deal done. And I think just the fact that there's such a strong team heading up the SPAC, it's a real vote of confidence in Payoneer that they're taking this one public. So I love to see this, right? It's a good sign that this is not really just a deal for the sake of the money and the quick cash out and the payment sort of thing. This feels like a real business being brought forward into the market here. So in this deal, Payoneer will get $463 million in cash. There's $300 million in PIPE in the deal, which is not bad at all. The total deal valuation is $3.7 billion at the initial SPAC price. So we'll get into that a little bit more in the bull and the bear cases, and I'll let you know what I think about that valuation. Now, if you look at Payoneer, Payoneer is an interesting company. They've been around since 2005. Back then, they were a very tiny little startup that was looking to get into payment processing. I know from my days back then, there was just a general sense that there was a lot of money to be made in transaction volume processing and trying to be that middleman in terms of a payment processor in the e-commerce industry. And I think that's very much where Payoneer came from originally. They really started to grow in 2016 as they started to make these key acquisitions of other companies to add capabilities into the platform. So basically, if you look at what Payoneer is and what they do, that's their business, right? They're in the business of connecting B2B players, you know, businesses that want to pay other businesses and be paid by these other businesses. They facilitate payments from platforms. So some of their key partners are Airbnb, Booking.com, Fiverr, TopTal, you know, any of these online marketplaces that are looking to get people paid for services they provide, whether they're an Airbnb host or whether they're a small contractor working on Fiverr. The challenge for these platforms is how do you get payments out into the hands of these people that you need to pay in all kinds of different currencies across all kinds of different countries with all kinds of different tax implications, regulatory frameworks, compliance rules. It's just an absolute nightmare when you look at all of these different countries and people that need to get paid with different legal structures. Maybe they're incorporated, maybe they're sole proprietorship, maybe they're just a partnership, maybe they're an individual. Whatever it is, all of that needs to be respected in terms of what the actual laws and the rules are with respect to taxation and all of that stuff. So it's a difficult problem, and that's really what Payoneer is all about. They're trying to solve that problem of flowing those payments between businesses, large businesses on the platforms, and small businesses that are actually providing these services on the other end.
What's the upside potential?
So, point number one in the bull case is growth. I think more than anything else, this is a growth story. And that's always been true about this transaction processing business, where you want to actually make a couple of pennies on every individual transaction. It's all a volume game, right? It's all about growing those numbers. So, I think Payoneer is in a good position to actually grow as the volume of freelancing grows, as the volume of these e-commerce B2B transactions grow. So you think about the growth that's happening right now in some of these platforms like Fiverr and TopTal and freelancing and all this remote work that's happening and all this kind of thing. There's a lot of growth behind this as we look to connect remote workers from wherever they are to these platforms that want them to do work. There's tremendous growth in all of those industries. And so I think Payoneer is in a great spot to grow organically along with the transaction volume that grows in that business. It's a really, really good story there. They're highly active too in a lot of the countries that are now just now getting into the business of remote work and remote support and freelancing and all that kind of thing. So some of the key markets like Korea and the Philippines and in India and in Pakistan, there's so much remote work happening with these very small businesses and these small freelancers that are now able to do work for some of these big platforms and outsource work, whether it's IT or creative stuff or design or whatever it is. Those are really, really key markets, and Payoneer has done a great job, I think, in those markets by growing into them and understanding how to do business there. And they've got the numbers to back this up too. You know, their retention rates within the businesses that they've signed up over the years is super high. It's over 100%, which means basically that when they sign somebody up, they not only stay with them, but they actually grow with Payoneer as their businesses grow, which is a pretty fantastic story. You know, it took me a minute to understand the point they were trying to make here on this slide. But what they're saying is, if you look at the cohorts that sign up with the platform in any individual year, and then you track them through the years, they only grow, right? So a cohort that, that signed up in 2015, they stick with them. And today they're actually much more massive than they were before. And the amount of transaction volume that's coming through is bigger, and the fees that Payoneer is able to make is bigger. So you look back at this story, there's a really, really nice, consistent growth story here for both Payoneer and the folks that are being paid and paying on that particular platform. So I think we have every reason to believe that growth is going to continue. It's a really good story so far. Number two is I love the fact that they solve a real problem, right? This is a really difficult issue. I've been a freelancer for 25-ish years, whatever it is, and I have worked with international clients. It's an absolute nightmare. It's even difficult for me as a Canadian to do work for an American company, for them to figure out how to get money into my hands. It's surprisingly difficult. Wire transfers are unbelievably expensive. They feel very risky. You know, if you get one number wrong, you're not going to see your money. If anything goes wrong, it's a difficult problem to untangle, and the tax compliance issues are wild, even between closely related countries, not to mention if you're doing business with a completely foreign jurisdiction that's in a different time zone and all that kind of thing, super difficult. So, when Payoneer is able to step up and say to a platform, hey, we've figured out how to do business with freelancers in the Philippines, and here's what it is, that's an attractive picture to a platform or a provider that doesn't want to mess around in that business, right? If you're an Airbnb or a Fiverr, you want to focus on your core business, which is connecting and driving work and that kind of thing. You don't want to get bogged down in the financial end. So to have a reliable partner to come in and solve that problem for you is pretty awesome. Payoneer seems to be doing a good job of it. And so I think they're adding a huge amount of value to these platforms that really, really need their solution. In this business, in fintech and in payment processing, your reputation is unbelievably important. You have to be trustworthy. People have to feel that you're stable and that you're going to be there. They have to feel okay about leaving their money in your account and that it's not going to disappear or be frozen or that kind of thing. If you look into the history that Payoneer has had in terms of those kinds of issues, it's pretty darn good. They've had a few things here and there, and I'll get into that in the bear case. But overall, I think that their stability and their reputation is a key point in favor of the bull case. They seem to be doing quite well. They have had no really significant cybersecurity issues that I can find, no big hacks. I think that's an enormous risk for a payment processor in fintech. If they get hacked to any significant degree or have a big breach, then they can be in a lot of trouble. They could lose a ton of business over that. It doesn't seem to have happened to Payoneer. Point number 4 here is I think they have huge upselling potential. As they get a lot of these B2B transactions flowing through the platform and they get a lot of businesses signed up, they're now in a really unique position to offer additional services, both to the platforms and to the smaller businesses that have signed up with Payoneer. One of the key opportunities here is something called invoice factoring. Payoneer actually calls it working capital. It's the same kind of thing, but the basic idea is once they get to know a business, they can say to them, hey, if you need a loan for 10 grand or 50 grand or something like that, we have the data here to see that you're a pretty reliable business, right? You've got 2 years of history. We know that you've got money coming in from these various folks that have been paying you reliably for the past year or whatever it is. So we feel really secure in offering you this working line of credit, or we'll factor your next 90 days worth of invoices at a really attractive rate because you're a reliable source of income. That's a really, really valuable service offering to these smaller SMBs that have signed up into the platform to access that kind of working capital, and Payoneer is in a great position to do it. Not only that, but there's other services they can upsell into these folks in terms of bookkeeping, AR management, all kinds of payroll stuff that they can then manage and sort of pull a lot of the financial ecosystem of these SMBs that have signed up into the platform and actually provide those services into them, which is a pretty darn profitable business in and of itself. So once you have all that transaction flowing through and once you have that data, you can absolutely sell more of this stuff into these companies. The last point here in the bull case is the valuation. I like the valuation in this particular deal. I think it's fair. They're not exactly getting a bargain, but I think it's not a situation where they're overpaying by too much. They have a nice slide here where they look at the valuation and compare it to some of the peers in this space, so you line them up against Square and Shopify and PayPal and some of this. None of these companies really compare all that directly to Payoneer. I think Payoneer is a fairly unique business. I'd like to see better comparables in here, like TransferWise, for example. Obviously, they're not here because we don't have that information. But just in terms of what you can see here in terms of the growth rate that Payoneer is expected to see, I think it's comparable to the growth rates that we're seeing in some of these similar platforms. And so, and then if you look at what we are potentially able to pay for that 25% growth in Payoneer, the multiples are much lower, right? So if we can get 25% growth in Payoneer for only a 7.6 multiple in 2021 versus the multiple that we're going to pay for something like Square for a similar rate of growth, I think it's a really good story if you look at the valuation with respect to the growth that we're able to purchase. And that's why I say it's all about growth for Payoneer, right? Their valuation is based on growth. Their business model is based on being able to recognize that growth. And I think if they do, then this valuation is pretty darn compelling. I think if you were to try to value Payoneer based on earnings, which you can do because they're profitable and they have earnings, they come in at something around a 30 to a 50x multiple on a PE calculation. That's high. It's not astronomical by any means. It certainly doesn't compare to what we see in Square and the like. So I think it's still fair, but really I think the valuation metric that makes sense here is the one based on growth. And I think that the SPAC at least is getting Payoneer for a pretty darn reasonable price given the growth rate that they're likely to experience. Let's talk about risk. First off, in the bear case, you have to look at competition. I think that Payoneer is vulnerable to competition. I think that a company like TransferWise can absolutely do most of what Payoneer is doing. I've used both platforms, and I love the fact that Payoneer has this prepaid debit MasterCard thing that they'll offer you. It's pretty awesome. TransferWise doesn't have that. They're trying to get there. They don't have it in as many jurisdictions. I think though if TransferWise had that, I would kind of prefer TransferWise in a lot of the instances that I'm getting paid for anyway. So I kind of like that. So anyway, from a bear case standpoint, it sort of points out to me though that that Payoneer is relatively easily replaceable. And we see this on some of these larger platforms like Airbnb that support a huge variety of payment methods. It's all up to the hosts, right? So you can go into your account in Airbnb and say, you know what? I don't want to get paid by Payoneer anymore. I want to get paid through PayPal or some other method, and boom, it's done, right? So as soon as somebody is going to offer equivalent functionality or better than Payoneer on any given platform, I think they're at risk of being unseated by the competition. So that's a huge risk for these guys, and they have to stay on top of things. Number two is they are very vulnerable to any indication of fraud or any kind of drama. If you look at the community forums for Airbnb or Fiverr or some of these platforms, and if you search for Payoneer, you do hear some rumblings of complaints about Payoneer froze my account. Payoneer investigated me for fraud. Payoneer thinks I'm a money laundering whatever. You get a lot of this, and that's to be expected, right? You're going to see that on any platform. But I think if the volume of that rises above a dull roar and gets a lot of publicity, gets out into the news that, oh my God, Payoneer froze hundreds of thousands of accounts due to some system glitch or something like that, then it could absolutely sink these guys, right? Their reputation is that important. So I think they have to be super, super careful about that, and they're really vulnerable to that kind of thing happening. Point number 3 here is that Payoneer, the entire business case for Payoneer is based on aggressive growth. And I think if they fail to recognize that aggressive growth, then their business is going to immediately suffer. It's all about the growth here, right? And I think that their upstream customers, their platforms like the Airbnbs out there, could absolutely limit growth. And we saw this during the pandemic. We saw that all of their travel-related revenue dried up, to a huge extent, and they took a massive hit from that. Totally outside their control, right? But that's the kind of thing. If you're a payment processor, you're very vulnerable to the limitations on your upstream growth from your upstream clients. These platforms that are using you to do business. And so if another thing like that happens, or maybe a platform leaves because of trust issues or whatever it is, then these guys will take a massive hit to their valuation, and the stock price is probably going to dive as a result. So they're vulnerable to that kind of thing again. The last point here is that, although they're solving the problem of jurisdictional compliance and risk and currency problems in all of these different countries for the platforms, they're then taking that risk on for themselves, right? So it's really, really difficult to stay compliant with all the rules in all of these different countries. We saw drama in France in 2017. The French government said, you know what, this whole Payoneer thing smells like a facility to basically evade taxes, right? Money's going into this virtual account in Payoneer instead of into a bank account within France. And so it's an opportunity for tax evasion, and we want to shut it down, right? And so, I think there's a little bit of truth to that, right? I think that it is, in fact, a way that some companies might choose to evade taxes, squirrel away money in Payoneer and not report that income. I think that's probably happening in the platform. You have to assume that it is, to a degree. And I think if that story really breaks, if that problem is found to be very widespread, then they could really take a hit from that, where an entire country might shut them down or tighten regulation to the point where they're not able to be useful in a certain country. That's a pretty big risk for these guys. Okay, so the summary here, to my mind, the bull case is all about growth. Like I've said, it's a really good growth story. I think it's growth at a reasonable price. I think it's a strong business. I think they have really, really good prospects for growth. The bear case is pretty weak to my mind, right? And it's all about threats to that growth. So I think if all goes well for these guys, if they can execute on their growth plan, and if no outside factor really derails them, then I think they're going to do really, really well. I think they're an awesome company. I think the bull case totally wins on this one. I think this one's a good deal. And I think the company's actually going to do well in the future. So guys, I hope that helps. Please throw the video a like if it did. Hit that subscribe button and ring the bell, and I will see you on the next one.